You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
How do you manage a large single-family rental portfolio from a distance? Stay on top of things and hold your property managers accountable. Our guest today will tell us exactly how he's managed to do that with the help of some state-of-the-art technology that he created. I'm Kathy Fettke, and welcome to the RealWealth Show. Anton Ivanov is a U.S. Navy veteran, real estate investor with a 40-unit rental portfolio spread across 4 states, generating over $15,000 in monthly passive income. And he says it only takes about an hour a week for him to manage it all. Anton is also the founder of 2 popular real estate software platforms, DealCheck and RentCast. DealCheck is the leading real estate analysis platform for quickly analyzing and comparing rental properties, flips, and commercial buildings. And you can get a discount by going to DealCheck.io and using RealWealth as the coupon code. Anton, welcome back to the RealWealth Show.
Thanks for having me again, Kathy. Glad to be here.
Now, in the last episode that we did, which was years ago, and maybe some of our new listeners didn't hear it or don't remember it, you were building your portfolio. And so where are you today with your real estate portfolio and what's in it?
Yeah. I think we talked some number of years ago, I think 2+ years, and we were at around 30 units then, I think. So nowadays we've grown a little bit. We're at 40 units. And these are all mostly single family and then small multifamily. So we have a lot of fourplexes. And they're spread out across a few states. We have some units in San Diego, California, Atlanta, Georgia, and the bulk of our portfolio is now in Kansas City, Missouri.
And it sounds like those properties performed pretty well during the last few years and during the COVID pandemic. So how did that go?
Yeah, so we were, when COVID first hit, we had quite a few units, obviously a fairly large portfolio. We were a bit scared, I would say. It was kind of uncertain what was going to happen with our rental income. I started hearing stories from a lot of investors, a lot of other folks I know where tenants weren't able to pay rents. And then at the same time, the loan payments continued, all of the expenses continued. And also most of the states where we have properties put kind of eviction restrictions, eviction moratorium, so you couldn't process evictions or anything like that. So it was kind of I would say a challenging time for our portfolio, but overall, kind of looking back, we've done very well, all things considering. And there was a few factors that helped us with that I think are a bit underrated, in terms of kind of when folks are looking to build our portfolios. The first one was definitely having good reserves in the bank. I kind of personally have this goal or this target where anytime we buy a new rental property, we set aside 4 to 6 months of of expenses for that property in a savings account. So kind of similar logic to where most people use for their emergency funds. We do the same for our real estate portfolio. So, with 40 units that we have now, it's quite a bit of cash just sitting around. Obviously, we could deploy it potentially and buy more properties, but it gives us a very nice cushion. And for things like the COVID pandemic or just, potentially recessions or downturns when your income may be a little lower and your expenses might be higher, we had this cushion, and so any kind of unforeseen expenses, any loss of income, we were able to weather out very well given this cash. So we weren't like scrambling. We didn't have to sell our properties, which would be the worst, I think, or dip into our personal savings or anything like that. So that was a great thing to have. And then another thing was working with our tenants. We use property management companies for all of our properties. So it's kind of impersonal. I never meet our tenants. I don't really talk to them myself. But at the same time, I never forget that they're just people, right? So obviously you have your lease agreement, and it'll have things like what to do with late payments and evictions and all that sort of thing. But during COVID especially, we basically gave a little more leniency to our tenants. Instead of saying like, hey, you couldn't pay your rent today, so we're going to slap you with a fee, or, if you didn't pay it for a month or two, we're going to start the eviction process, which again, we're not even getting processed back then. Instead, we basically reached out to all of our tenants, and we worked out plans, whether they can pay half rent now, we defer some of it later, or we forgave even some of the rent for tenants that have been otherwise, very good and just fell in hard times during COVID. I just think it's important when you're a landlord and a rental property investor to just kind of, keep at the back of your mind that it's not always, I think, in your best interest to be 100% stern, 100% by your lease, by your book. Especially if you can kind of survive for a few months, if you have those savings, that cash cushion, like I said, for the emergencies. We're trying to work with your tenants, and by doing that, we actually minimized, I think, our evictions. We've had a few, obviously, some folks never recovered from that, but overall, we had very low loss of income during COVID. We've recouped most of the rent that folks weren't able to initially pay when they lost their jobs or couldn't work. And then over time, through the payment plans and different arrangements that we worked out with them, we basically recouped almost all of the income that we would have had during that time. So I think it's just a good thing to keep in mind, just to be able to be flexible with your tenants.
Very, very good advice. Yeah, we had a woman who was dealing with cancer in one of our properties, a single woman who really had no place to go. And
Right.
we just kind of helped her through that, and she got through it. And she's been obviously a loyal tenant ever since for years.
Exactly. That goes a long way. And that's another thing, because when you get a larger portfolio like ours, I realized over time that maybe something not as evident at the beginning is that vacancies and turnovers are actually become your biggest expense. It's not the maintenance, it's not the taxes. It's when people leave, you have to rehab or turn the unit, find new tenants. Like the loss of income during that time and the expenses actually overall have the biggest impact on your cash flow than anything else. So if you can, kind of establish a good rapport with your tenants, show them that you care and actually do care, and you're not just all business. Yeah, I think that goes a long way to keeping them happy, and then they will stay at your properties. Absolutely.
So how did you get to 40 properties? What kind of loans have you used to get to that point?
So we've gone through quite a journey over the years. We started, I think it was back in 2013, so about 10 years ago. And when we were first starting out, it was all conventional loans with your kind of standard 20% down payments. Me and my wife were fortunate. We had good jobs that provided us income that we were able to save for the down payment. So we didn't really use too much of creative financing strategies. We did house hack one of our first properties. It was a duplex that we bought, so we took advantage of owner-occupied financing, which you can usually get a lower down payment on that. So that's another great strategy. But yeah, I think for most investors, and for us included, conventional loans, they just have the best terms. They have the best rates. They have decent down payments. Usually it's 20% on an investment property, and they're very abundant. Pretty much any bank, financial institution, credit union that you can think of will offer these loans to you, and sometimes you can actually get pretty good rates. Even on investment loans. If you get the loan from a financial institution, you have other accounts with like checking or savings, stuff like that. So we definitely took advantage of those when we were first starting out, buying mostly single family properties. Now, more recently, we kind of transitioned to buying multifamily, larger properties with, kind of larger purchase prices. And we were getting a little capped out, once you get to like 5, 8, maximum maybe around 10 loans, I think, for conventional banks just kind of just hold back and stop lending to you, right? At the same time, they have a debt to income ratio requirements. So they look at your personal income, all of your, debt payments, including all of your loans, and kind of use that as a qualifying criteria. So when you get a lot of them, it tends to just kind of stress that a little bit, and you may have a harder time getting them. So we did reach that point, and we transitioned to commercial financing. So this is kind of very asset-backed loans. They're not based on your personal income. The lenders for commercial loans look strictly at the property you're purchasing, its value, your projected cash flow, and use that to kind of underwrite the loans and give you maximum loan amount. So we've done quite a few of those. They do have higher rates. It's usually a couple points higher than what the conventional rate would be. And their down payments requirements are sometimes higher as well. Sometimes it's 25, sometimes it's 30. Depends on the lender. But those loans, they pretty much open up the playing field for you to scale infinitely, right? That there's no limit on the number of loans you can typically have. There is no debt to income ratio to worry about. So, when you get to that portfolio, maybe 10 plus units or 10 plus properties, commercial loans, portfolio loans, kind of similar product, they can really help you scale, which it did for us.
So I'm sure that there's listeners thinking, oh my gosh, I can't even imagine managing managing one rental, let alone 40 doors. Yes. Yeah. And yet you say that you only really work on it an hour a week. How is that possible?
Well, the number one thing is we use property management companies, and we have, right from the go, from the first property we bought, even the duplex that I mentioned that was house hacked. So we lived in one of the units, the other one was rented out. We didn't manage that unit. We hired a property management company to do that for us, and obviously now we have properties in different cities, different states actually. I would not even imagine, managing it ourselves. So I think finding a good property manager in each of the locations you have properties is absolutely key. And that's not an easy task either. There's a lot of property management companies. If you Google, New York property management, there'll be probably dozens, if not hundreds of results. So I try to get property management referrals through other investors. That's kind of been the key for me to finding good, reputable companies to work with. Is I first network around and find other investors, other rental property owners in that particular city, and then ask them who they use for property management and if they like them or not. So that's how I found our companies, and we've been pretty fortunate. We had to change a few of them over the years, which is another part that you may come in contact with is if it's not working out with the property management company, it's probably best to find a new one instead of just trying to stick it out. Because these are, at that point, you're kind of, I look at it as you becoming the CEO almost of a business. And it is a business. Once you have 10 plus properties, you're managing a lot of people. Actually, you're not really managing the assets anymore. The goal is to find the people like property managers and maintenance crews and rehab crews to manage and do the day-to-day work for you, and you're pretty much overseeing everything. So your time commitment does go down over time, especially when you work with these companies. You understand how they do business. I used to do pretty regular checkup calls, for example, with each of my companies, sometimes weekly, when we're first starting out. Basically get on the phone with them, ask them, hey, is there anything going on with the property that I should know about? How's the leasing going? How's the maintenance? And basically, just learn how they do business. And if there are certain aspects of that you don't like or you want to change, just communicate with them. Usually I found companies very responsive. If you're coming from, kind of a good place, not really trying to critique their operations or like micromanage, which nobody likes. But basically just explain your side of the things to them, ask them to shift a few things, set some guidelines. And then over time, as they kind of learn what you like, how you like things done, they can roll with it usually. And then my time commitment nowadays pretty much comes down to, still doing my checkup calls every now and then. With a few of our larger property managers that manage the bulk of our portfolio. And then it's basically reviewing the monthly accounting statements, which give you a good overview of, hey, what's going on with the properties, at least or not, what kind of maintenance actions were taken. And then obviously that's kind of your glimpse at the performance of the property. And if you see something out of place or you have questions on, you can shoot emails or call your property manager. But yeah, so I kind of my view on this, especially with the larger portfolio, is, I don't try to micromanage. I just don't think anybody likes that. I don't like it personally. I'm sure most people don't. So, the property management companies that you hire, they're there to do a job. So you should let them do your job. But at the same time, I don't believe in just kind of, give them a property and forget approach that I think some investors try or believe in, because again, things might slip through the cracks sometimes. Maybe the company is not doing things exactly how you like it. So I think it's good to have some oversight, some involvement, especially at the beginning when you're working with a new company or a new property. If something looks out of place, do you bring it up? If you want to change something, let the property management company knows. I think they'll go a long way to establish a good relationship between you two and understanding, and obviously improve your performance over time, because management is a key aspect of owning rental properties.
Absolutely. And another key component is the new technologies that have made managing so many properties easier.
Yes.
And you've been at the forefront of that. I know years ago we used to use little spreadsheets and, try to analyze our portfolio.
Some people still do.
and a lot of people do. And it can definitely work if you've got a easy to use spreadsheet. But when I had you on the show before, you had started a company called DealCheck, and
Yep.
we are super excited about it. We have a lot of our members at RealWealth using it. I think you gave us a discount for any of our members that if they use the coupon code RealWealth when going to DealCheck, they get a better deal. And I highly recommend it because, again, I've been asking for technology that was better than our spreadsheets, and we hired people
Right.
to develop it, and we didn't get it right, and then we discovered what you were providing. So tell us a little bit about DealCheck and how that's really helped investors, why you created it, and I can just tell you on our end, we absolutely love the features.
Yeah, and I just did a pretty in-depth webinar with Leah on the RealWealth YouTube channel. So I'll kind of preface, if you guys want a more in-depth look at the software with like a hands-on demo, if you go to the RealWealth YouTube, there's a webinar I think last month it was when it was published, where we did a good overview. But yeah, so I started DealCheck. It was quite a while ago. It was probably 2015, 2016. Where I was in the boat where I was analyzing a lot of properties, driving around, kind of looking at open houses. Agents were sending me property after property. And yeah, I had some spreadsheets that I used to look at cash flow projections, kind of my potential returns, basically all the important numbers that you need to know before buying a property. Because obviously, they say in real estate, you make the money when you buy. So you need to know exactly what you're buying, how much is going to cost you, but also what the cash flow is going to be, what your long-term returns are going to be. So I was using spreadsheets. I wasn't very happy with them. I was getting I had 10 Excel sheets. I would make a change in one, and then I would forget that I would make that change, tweak the formula a little bit, then everything else was off. So it was kind of a mess. And I was like, hey, there's got to be a better way to do this, and I'm a software engineer by profession. That's my career. So actually, it's kind of a nice marriage of the two. I thought, hey, why not build a simple calculator, which it started with, to help me analyze properties and also kind of keep track of them in one place, almost like give me a dashboard where I could look at my old deals that I analyzed. I add some notes to them like, hey, this was good, but XYZ was not that good. So yeah, I created the first version of DealCheck myself. Back then it was just a rental property, calculator, and now it's kind of expanded in its feature set. And it started slow. It was not like an instant overnight success. I shared it with a few investors that I knew, a few of my friends and family, and they actually loved it. And that motivated me to keep working on that company, and eventually hire a few more folks on our team and developers and marketing. And I'm happy to say it's been very successful, especially in the recent years. I think it's one of the most popular property analysis platforms in North America right now. And we've really focused over the years of building, a full suite of tools to help you basically from finding a property to help you analyze the different scenarios for rentals, for BRRRs, for flips, even wholesale deals, multifamily, to help you really understand what are your cash flow projections are going to look like? What returns are you going to have in the first year? What returns are you going to have in year 5, year 10? Help you plan your sales strategies down the road. Maybe you think about selling the property in 10 years. So what's your cumulative and, final profit going to look like? And then we build a lot of cool things like, you can look at sales comps, rental comps right in the software, create reports, look at maps and all that stuff. So, we've taken a lot of user feedback, and I think that's been part of our success. We've really focused on delivering, a product that does property analysis extremely well. So if you guys are interested in checking it out, again, look at the RealWealth webinar on YouTube. It's a great overview, or you can head to DealCheck.io. That's our website where you can start using DealCheck online or download the DealCheck iOS or Android app for your phone or tablet and start using it that way. And it is actually, we do have a free plan. So it's not like you have to pay immediately. It's there's a free forever plan. It's not a trial. It's actual free plan. It gives you all the core analysis tools. And, for a lot of investors just getting started, I know it's tough. Sometimes you have all these expenses. Everybody wants your money, obviously. So we've made sure that we always have a free version. And then, if you find yourself, you need more features or you want to analyze more properties, there's a few upgrade plans. And we do have the special RealWealth promo code that will give you a 20% discount forever on any of our premium plans. So if you just type in RealWealth when you activate your subscription, you will get that discount. It's exciting, to kind of see investors succeed. I get emails, feedback all the time from people saying, hey, your tool helped me buy my first property or helped me buy my 5th or 10th property. And that's really rewarding. So I always, love sharing our software on podcasts like this and webinars. And it's great to see, you guys embracing technology and kind of, helping people learn property analysis and maybe, help them get over that analysis paralysis stage and actually, buy their first property and start building their wealth that way.
Yeah, we use DealCheck now when we're looking at properties and showing them to our members because, you don't really miss any numbers there at all. Right. And then all the properties have the same, we've got 15 different teams. And if they're using 15 different pro formas or different spreadsheets, then you don't really know if they've tweaked numbers in a different way to make their numbers look better, right? And so we're using DealCheck just to make sure it's all level, that everybody's using the same interest rate and reserves.
Well, and a lot of sometimes new investors, it's easy to get overwhelmed and make mistakes. And I think I've been there. People are saying like, here's the cap rate of the property, here's the cash on cash, here's the ROI. You may not know what those even mean, or especially how they're calculated. So with so many different variables, it's that is one of the benefits I think of using a software like ours is we produce very consistent formulas and we share all of them with you. It's fully transparent. We have a built-in glossary that you can actually look at through definitions and calculation formulas of all the terms, so you know exactly how the math is done. And you don't have to be worrying about, hey, should I divide it by the purchase price? Should I multiply it by the purchase price? Like it's industry standard, proven formulas that you can basically just look at the output of and make your investment decisions that way.
Yeah, updating myself, but back in 2005 when I was a mortgage broker helping investors, just with their loans, and I had these very rudimentary spreadsheets that would show what how the property might perform over 5 years or 10 years or even 20 years. And that's where people would get really excited. And then, it was such a not very technical spreadsheet. Right. We stopped using it. Again, I said I hired people to build what I wanted because it's so important for people to be able to look at the whole picture and not just the 1 year, first year pro forma.
Yes.
It's what happens over time, right? As rents go up, as you're paying down your loan,
Exactly.
as the property's appreciating, even, 2%, we would put a 2% appreciation rate, and investors would still see that if they bought 10 kind of average properties, nothing too special, just average properties that you can find. They were still coming out as multimillionaires after, 10, 15 years. So what do you see? What is it about looking at the first year pro forma versus the long term when you're looking at the numbers on a spreadsheet?
Well, the first year pro forma, like you said, can be a bit misleading. It's good to know what your cash flow will be right off the gate. But if, for example, you're buying, turnkey properties, for example, that you can find on the RealWealth website. Sometimes, usually their prices are close to market value, so you're not really getting a big discount on the purchase price. Your cash flow may be fairly limited at the beginning, and it's good, I think, to see like, yes, there'll be some positive income from the beginning. But I find at times, and I think I was like that myself, you can get a little bit demotivated. You're saying, well, this property will only give me, $200-$300 of cash flow a month for the first year. And that doesn't seem like a lot of money, especially if you're considering that, hey, you spend, tens of thousands on the down payment to purchase it. But when you start looking at, year 5, year 10, which, for me, when I buy rental properties, I look at it as a long-term investment. I don't really necessarily think it's a get rich quick scheme. It's not going to make a super big impact on my life like next year or maybe even the year after. But if you take, real estate has a lot of compounding going on for it, and different streams of kind of income and appreciation that combined together increase your cumulative return significantly over time. For example, you have your cash flow. Obviously it may start a bit lower in the first few years, but then as the rents go up, if you invest in a good neighborhood, good market, that will significantly kind of compound and increase your cash flow over time. At the same time, your loan is getting paid down, right? If you're using financing, you're using that leverage, you won't necessarily see it if you just look at year 1 returns, because, your loan balance will be nearly the same at the end of the first year. But if you look at year 5, year 10, now all of a sudden your loan balance is significantly lower. You're building up equity in that property. If you were to refinance or sell it, all of that money will come back to you. And then obviously, the third, there's usually price appreciation. Again, if you're buying in a good growth market, the property value, it may not increase much in 1 year, but over 5-10 year period, you will see kind of that spread going, up and up, meaning the property value is getting higher, loan balance is getting lower, again, increasing your equity. So yeah, I love looking at long-term returns. And, in DealCheck, you can look at buy and hold projections for up to 30 years. Look at how your equity will increase, look at how your cash flow will increase, and actually look at your cumulative ROI and IRR metrics, which I'm actually a big fan of. These are cumulative returns that kind of take all of those factors into account, not just cash flow, but also the value appreciation of the property, the loan pay down of the property. And you can see how all of those numbers contribute to your overall return, which, over long periods of time is usually significantly higher, even for, like you said, mediocre properties than stocks or bonds, for example, because there are just different components that add up to your return. And then long term, it's not just a great way to build a passive income stream through rental properties, but it's also a great way to just build your wealth, were you to sell your properties at the end and just kind of cash out, or maybe you pass them down to your kids or whatever you want to do with them. It's kind of, I think, a great vehicle for both building wealth and passive income.
Absolutely. Amen, as they say. All right. Anton, it's always a pleasure to have you here. I love it when real estate investors create technology that helps, that for themselves, but then you're able to share that with the world. It's just like you solved a problem for yourself, and then that helps others as well. So thank you for being here on the Real Wealth Show. And again, you can go to the Real Wealth YouTube channel to see the webinar that Anton did, and then of course talk to an investment counselor at RealWealth, they'll go over the numbers with you. It's a very thorough pro forma and so important because a lot of times investors miss all the numbers. All right. Well, thank you again so much for joining me, and we will see you next time.
Thank you, Kathy.
And thank you for joining me here on the Real Wealth Show. Again, you can go to DealCheck.io and use RealWealth as the coupon code to get a discount. It will really transform the way you see your portfolio building. And if you want to build that portfolio, you can also go to RealWealth.com and tune into our most recent virtual live event. We've got it all uploaded there, where 15 different teams from across the country showed us what's going on in their markets, the rental demand, where rents are actually going up in spite of what you hear in the headlines, and where prices are going down and therefore cash flows up. Again, you can check that virtual live event out at realwealth.com.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.